Hi everyone, welcome back to my channel. So I have seen recently quite some requests related to this allocation method in Dynamics F&O. So I'm happy to produce some videos to walk you through the different methods supported by Dynamics. So again, as a starting point, I'll quickly explain what are the supported methods. And for this episode, I'm going to focus on this basis method with a live example, and then we can test out in the system to have that full end-to-end understanding. Without further ado, let's get started. All right, so the starting point, what are the three methods supported by the system? So most commonly used allocation methods, number one is evenly allocated. So that's straightforward. You have total 1,000 amount and you want to allocate evenly across 5 branches. So that's easy calculation. System will handle that calculation automatically. And the second approach is to have the fixed percentage calculation for your allocation. So typically the use case is, let's say I have the total rent cost to be allocated across different business units. And depending on their square footage or their contributions, I may have a fixed percentage. So for branch A, that's 30%, branch B, that's 10%, etc. So you can set up that fixed percentage. The system can follow that rule and allocate the total cost accordingly across all the branches. So that's the second method. And the third method is called basis method. That's what we're going to talk about today. It sounds a bit complex, but very easy to understand. So that means the allocation will happen based on a third factor. So what does that mean? I want to allocate cost, but the actual allocation should happen based on sales. So the sales is going to be your third factor. So it's not directly within the cost scope to allocate, but it's more based on another type of transaction data or another type of balances that you want to use as a reference to drive the allocation. So the typical use case I have already mentioned, for example, each branch will contribute to the final sales. And depending on their sales percentage, you may want to allocate the advertising cost. So that's the scenario we're going to cover today. So with that, those are the three most commonly used allocation methods, but you have a lot of variables. For example, Dynamics also supports the weight allocation, but it's similar to the percentage. And maybe you can have additional statistical GL transactions for headcount. So that allocation will be based on your total headcount account balances. So those are all the variables. For now, we'll focus on those three key methods, and then we can do additional videos to further break down. All right, now getting back to our key topic on this basis method. The business scenario we will review is I want to allocate the advertising cost per business unit sales. So there are a few concepts in Dynamics you need to understand, and then we can go back to the system and show you what that configuration looks like. The first concept is basis rule. So what does that mean? In Dynamics terminology, this just means we want to know how that allocation should happen based on what. So in this scenario, the allocation should be based on the sales amount for each business unit. So you're going to see when we configure this basis rule, it's going to include all the business units tied to their sales account as the starting point. Now moving on to the second concept in Dynamics, what is called allocation rule. So this is basically to define how you want to allocate the costs. So pay attention here because we're moving to the cost side. The basis rule is more on the sales side. Now on the allocation, we want to allocate cost. So again, you have two concepts. Number one is the source. So what is the total balance of that specific account from source transaction that you want to allocate? So in our case, that's going to be the total advertising cost account. So that's your sixth account to capture all transactions for that advertising cost, regardless of branches or business units. And then what will be the destination? So with that source, how you want to allocate to where, to which business unit. And that's where you define the combination of both advertising GL accounts associated to your business unit financial dimensions. So with that, let's just quickly do an update with this example, and you can see the difference. So the basis rule, we're saying this is your sales transaction. So that's going to be your for account associated to each financial dimension as business unit. So 001, for example, and you will have another basis rule for the same for account, but now with 002 as business unit, etc. So let me do a third one. All right. Now, for allocation rule, what is the source? So we talked about this is the lump sum of your total advertising cost. So here you can do 6 accounts, and that's it. You don't need any financial dimensions here because that's your source transaction. All the amounts under this advertising cost account, we should allocate out. Now for the destination, how the cost should be allocated. So that's going to be your 6 account associated with each business unit. So it's going to be 6 and associated to 002 branch, 6 associated to 003, etc. Okay, so this is kind of the examples you expect to see. We're going to switch to Dynamics to check the actual configurations. But quite often the confusing point is this basis rule and the source. They are different type of sources. Base rule, this is a source from the sales side, and this source under allocation rule defines your cost allocation methods. Okay, so let's switch to Dynamics. All right, let's check that out. So open up GL module, and you have a full section for allocations. You can just follow this logic. From configuration side, first you need to get this ledger allocation basis done. So when I open this up, you can see clearly now we have all the sales for each business unit. So the basis, you can create a new one and give a name, BU001. This is for sales home, and then BU002 for sales auto, etc. So those are all your business units. And for each basis, now, if I do source here, you can clearly see this source is on the sales side. So the main account is 401 account. You can use a specific GL account, or you can also just use a group of accounts. All the accounts starting with 401, you want to allocate out. So you can just use this symbol. And then that financial dimension for this business unit 001, that should be tied to this 001 value correctly under this business unit. Right? So now we can go back. Same thing for BU002 as allocation basis. The source, we expect to see the same sales account, but the financial dimension now is going to be 002. All right. So we just follow this logic. Coming back to Excel sheet, you can see clearly now we're having the same setting based on 4 accounts. Okay, now we can move on to the cost side allocation rule. So let me go back to GL and then find this ledger allocation rules. So again, now we're switching to the cost side. So the first rule is allocate advertising expense based on business unit sales, right? And the few prerequisite items. So under general, you can see, okay, this rule is active for now. When is the last run date? So those has to be enabled. And then the allocation method, you have to specify this is for basis. And if I open up the drop down, you can see we support fixed percentage, fixed weight, and equally. So for now, we just use basis. And of course, you need to define a journal name specific for allocation and define the source data. So typically that's just ledger, nothing specific. Moving on to the offset side, typically what I see is always with the source, and then you can define the source and destination from this top level. So now if I click source here, we're getting into this part. Source, we want to define what is the lump sum total cost account. In our case, that's advertising cost account. So that's why you can see we have this GL account associated without any financial dimensions. Because at this stage, in this scenario, I don't want to do any refined allocation. But you may say, okay, actually, I also have SG&A. I have selling type of advertising. I have admin type of advertising. So if you have that refined level, and the requirement is to allocate for a specific type of advertising, then you may need to add additional criteria here to say, okay, now I want to use a financial dimension, and then that should be a SG&A type. And then from here, the source criteria should be the specific selling related advertising cost. So here is flexible. You can define and add additional criteria. Now I'll just remove that to keep it simple. Okay, now we can move to the destination part. Very straightforward. Moving back here, destination, that's your advertising cost per business unit. And again, from this list, you see one rule per business unit, 001, 002, 003. They are all following the same logic, meaning that you see the basis, you need to tie this specific basis rule which is created into this destination. So for 001, it's going to refer to your sales side to use that as a basis to allocate, right? And then the destination account, that's going to be your advertising cost account associated to your business unit 001. Straightforward. And if we move to the BU 002, the basis here gets updated to a different basis rule we defined, right? That's sales plus BU 002. But the destination GL doesn't change, meaning that I always want to allocate that advertising expense into the same account, but having a different business unit, in my case 002. So I will not go through each one, but they all following the same case, updating both basis and the financial dimension here. One thing to note is you have additional capability to allocate across companies. For now, we just allocate everything across USMF, but you can actually allocate across different entities if needed. Okay, so now we have completed all the configuration points. So we checked the box for basis rule, allocation on the cost side, the source and destination. All good. Now the next step is going to run an allocation proposal. So again, the system will run that calculation for you and generate a proposal type of journal for your review. And to do that, you just follow this logic to continue one up using this process allocation request. And from here, first select the rule. I want to use this allocate advertising expense rule and define as of which date. So within this dates, the system will go find the balance of this advertising main account by this date to allocate out. And this will also be your allocation journal transactional date or accounting posting date. Okay, and then for this zero source, you can choose to process or stop if there is no transactional amount to be allocated. So typically we leave it to process, and we always suggest keeping this proposal only so you have a review chance in case any issues are found, if the calculations are wrong, so you still have a chance to fix that. So leave this as proposed instead of posting directly. So the GL posting date, typically that's the same date with this as of date, but you can change that to a different one. Other than that, you can leave a reason comment if needed, but I can directly go OK. So the system is going to process that allocation, find that advertising main account, use that total balance to allocate out across all the business units based on their sales amount. Now let's check that out. Again, you follow this order and go one up again to check this allocation journals. So for my journal, it's going to be the latest. And when I open up this, you can see the calculations. Okay, so one thing to note, first, the date is the accounting date we define. But here, the data seems a little bit overwhelming. That's because I have a lot of testing data in this environment. So it's actually creating multiple allocation vouchers. What does that mean? So for the first section, let's see the number alloc 27. You always have the debit side for the business unit 001, 002, and 3. For number 4, you don't have any transactional amounts to be allocated. Maybe they don't have any sales number, so they don't have any cost allocation, but it still shows up because we have chosen that process option even though it's a zero amount, right? And same thing for number 5. And if I move down below, you see for this voucher, the last line is going to be this total lump sum cost line. and that's your total advertising expense together with other financial dimension combinations. And you're seeing now this amount is on the credit side. So basically, that's your total source lump sum to be allocated across branches. So now we finalized the analysis of this voucher. If I move down, we get to the 28th. That's another voucher. It's following exactly the same structure, but the only difference is you see for the total credit here, we are actually having a different combination for the source account advertising 601300 compared to the voucher 27. So the conclusion is the system is going to give you an allocation per voucher depending on how the source data is structured. So basically that advertising main account, if there are many combinations from the GL balances, it's going to create one voucher per allocation. All right, so once we reviewed everything, you can still make changes here if needed, but it's not recommended because you want the system to automatically calculate for audit purposes as well. But with that, you can post it directly here, and then you're done with the full allocation process. All right, so that's all about this basis method. This is a very simple one, but we can definitely use the same logic to design more complex scenario using the same basis factor. Okay, I hope this video is helpful. Please feel free to comment, like, and subscribe to support the channel. Thank you so much for watching. I'll see you in the next one.